Yes.
And you have, thanks, life sciences, you are in life sciences. Given that you are born over here in India, have you ever considered the ancient ways, not only Indian, not only Ayurveda, I'm talking about everything, holistic, right? It can be Unani, it can be other things as well. Those can actually help, and that is something that, of course, with the regulations, I don't think FDA will ever approve it. But I would like to know your take on this. And just a second, I have another question for you. You were giving a simile of coffee machine, right? And I think when you are selling a custom solution to the customer, you are actually selling him the drill machine. You want to make it appear as if it is a coffee machine. So I would like to have your take on that as well. Thanks.
First of all, I have complete faith in the Indian and the other systems which are there because plant extracts have been used from ages. It is the percentage of extract used, the way in which it's extracted, the way in which it's used, be it Ayurveda, be it botanical, be it nutraceutical, be it Unani, homeo, everything. All these things work on the principle of an extract being taken out and that extract being actually diluted and provided in the right quantity to a person so as to cure the person. Sometimes it could also be a poison that could be used to kill the poison within you and make you better. So I have total faith in this. I'm also coming out with a wide range of nutraceutical products which are there, which are actually, I'm not talking about the routine products that are there. So basically, I said I work on liposomes. So what I'm trying to do is get certain extracts, liposomally encapsulate them. Why liposomal encapsulation? I'll answer that part of it. When you liposomally encapsulate any nanoparticle of any substance, you're giving it a covering that is going to be accepted by the human body. So I'm not just giving you the harsh drug as it is, and also it protects it when it goes down through your intestines and to the various pHs of the body. You can formulate the product such that it actually releases only where it's supposed to release. So while the earlier systems and the extracts are perfect, we are just trying to modify. I'm not the creator of the product. I'm the creator of the formulation who will give it a drug release which will allow it to get released in the body. And you're right about it. I cannot do that at my facility, but what I can still do at my facility are the liposomal encapsulations or the pre-finished formulation intermediates that I can do. And then I get it converted into finished dosage form at a nutraceutical facility or at an Ayush facility or at any other. So yes, I have full faith. If I didn't, I wouldn't really believe that Charak and Sushrut and all really created some systems. And trust me, for me, Dhanvantri is not about the prayer to God, to the Lord of Wealth. Dhanvantri is the God of medicine, and I pray to Dhanvantri every Diwali, not to Dhanalakshmi every Diwali.
Yeah, and see the coffee machine and the drilling machine, the analogy is like, I'll give you in the context of AI so that it is simple to understand. For example, if you want to provide now, you want to incorporate AI for a customer who is right now not on AI. If you try to give now to the customer a drilling machine, he's going to get scared. My God, it's disrupting, it's changing, it's noisy. But if I try to give an AI similar to an experience of a coffee machine, it's very easy to use. It just blends in within the system. He just gets that convenience, that ease to use, and brew the fresh AI that the customer is looking for, not like the noise of a drilling machine. That was the analogy. Thank you.
Thank you so much. Thank you so much. Amazing discussion we had. We are really grateful to you for all the insights and the experience that you have shared. With this we come to end of this panel. Thank you, Shakti ji. Thank you, Satya ji.
Thank you very much, Shakti ji.
And Sumana ji.
Thanks a lot, Nabomita, once again. Thank you for bearing with me.
Okay, thank you so much. Please take your seats. Okay, we will move on to the next panel. She will introduce our next panelist because it's all about money. Yes, if it interests you, sit and listen. Yes, we have taken some time. To start it, which means we'll spend some lesser time in eating our lunch. Because right after lunch, we just want to introduce you to him quickly, Mr. Rishikesh Mehta. Sir, please wave so that everybody can see you. He is head of investment ONDC. Stay tuned to hear him because that's one speech that you wouldn't want to miss. And in the meantime, there are a lot of our promoters who have walked in, and we are really grateful to all of them for taking time out and joining us. So, Duhita, please take ahead. Take this ahead. Thank you.
We are moving forward to our second panel. Shri Sumit Mehta, Chartered Accountant, MD and CEO of Paradigm Advisory, with decades of experience in corporate finance, equity market, and SME advisory. Shri Anandachari, Senior Executive in SME and Startup at BSc, monitoring capital market access for small and medium enterprises. Shri Jinesh Doshi, founding partner at Srujan Alpha Capital Advisory, LLP, specializing in compliances, legal corporate reconstruction, and capital market advisory. Our second panel member.
So, ladies and gentlemen, we had a very enlightening first session. And one thing that came out from the first panel to the previous session is the importance of money. It is always said it's all about money, honey. And we are sitting right at the epicenter of the financial markets. So, without much ado, I will start with this discussion. We have two very eminent finance professionals here with us, Anand and Jinesh. Thank you very much, gentlemen, for sparing your time.
Thank you. Thank you.
Now, most important thing is we have always seen large companies. You see IPOs of LG, which is outside when you entered, or companies like Reliance and everyone looking at raising money. But what about smaller companies? Say like Dr. Vadlamani or Miss Iyengar and everybody looking at raising money. And that is where the beauty of small and medium stock enterprise exchanges comes into play. So we have two eminent professionals who are deeply involved with this. And to start with, Anand, what do you think is the benefit for companies to get listed? And should they really go public?
Firstly, I would like to thank Namonita ji for having me on this session. Thanks Sumit ji for this question. Let me put it across in Hindi and English. Very important है कि पैसा सबको चाहिए. जितने लोग यहाँ आए हुए, everybody is thinking about money because we are sitting at the epicenter today, National Stock Exchange. And before the introduction what she gave, I was working with Bombay Stock Exchange for almost 8 years out of my 31 years of career. So I quit Bombay Stock Exchange. I have started my entrepreneurial journey. My company name is Emergo Financial, where I try to support and guide the people into SME listing and startup listing. So I'm not working with BSE. So first thing is that why companies should go for listing. Firstly, people doesn't understand क्यों करना चाहिए. So सबसे important बात है कि उनको पैसा चाहिए. So most of the company which start their journey, they go to the banks where there is a barter system, give away their assets, take the liquid funds from the bank, and they start investing into the company, take the company to a level. After a certain age, that becomes a burden to them because they have to service the EMI. Here, when they are listed, honestly, there's not going to be any EMI burden on that. Because यहाँ पे आप कोई assets दे नहीं रहे, कोई mortgage नहीं है, you're giving a 25% of your stake and you're taking the money from the market and investing into the company for the next level of growth. So when you're doing this, you will be visible globally. When I look at the platform which I run for almost 8 years in BSE, we have today 652 companies listed on BSE and almost 670 on NSE. So both the platform put together have raised more than 30,000 crores from this platform, which has been existing for 13 years. So मेरे को ये दिखता है कि काफी potential इस platform की है, because we could really see more than 4,50,000 crores is the market cap created by this almost 1,300 companies listed. So first thing, what I really see is that the company get visible globally. And overall, when they are listed, they start doing the corporate governance and compliance, the more transparency is going to come. Because हमने देखा है कि जितना companies हमने मिले हुए हैं, जितनी भी कंपनी आती है, most of the people work on the taxation model. They don't show the actual profit onto the balance sheet and the turnover into this. So when they are working into the taxation model, when they come onto the listing procedure, they go to the process, they understand, when they're listed, they start showing the actual profit into this. Then they understand what is the market cap, what is the valuation and all. So first benefit to the company which is getting listed is going to be visible globally to attract more funds from the other investor which they are not invested earlier into the company. Second, that they are doing the compliance, bringing in more transparent to the balance sheet that add-ons to the credibility of the company also.
Thank you, Anand. Very important question for you. Before going to Jinesh, I'll ask you. You have extensive experience of more than 8 years with the exchange on the other side of the table as an independent entrepreneur on listing. What do you think holds back the companies from getting listing? And how do you see this mix of challenges that they face?
See, main thing is the mindset. What I try to create is that I meet the people, create that mindset to list the company. Because they feel that they are going to lose the control of the company, because 25% is the stake which you are going to give it in public domain. Remaining 75% is going to be lying with the promoters. So I have to just give you one example of a recent company which I got listed in 2021. Knowledge Marine Engineering Works belongs to Bombay. They have an office in Deonar. The promoter name is Sujay Kebal Ramani. He met me 2020 during the COVID time, and we had discussed and got them listed at 40 crores of valuation that time. Today, they are at a valuation of 2,400 crores, and the profit when they got listed was somewhere around about 7 crores profit after tax. Today, it's above the 45 crores PAT level. So that vision has to be given to the promoter, and that is the myth they have. They will lose the control first thing, and they have a lot of myths about the compliance part. Here on the SME platform, what I could really see, the compliance are very relaxed, and it's going to be half-yearly, unaudited, with a limited review. There should be an audit committee that has to be uploaded onto the website of the company, which is the compulsory on the website is compulsory for the company getting listed onto this. So I feel it is a platform for all the people who want to generate cash without much of a burden and not much of a compliance. And it's a cost-effective platform also. It will be, I could really see, I've been explaining the people, cost itna kam hai ki Mercedes C-class se kam aap list kar sakte hain. Today the people are spending crores of rupees on the marriage. It's very minuscule amount you're going to spend onto the listing part of the company. So I feel that is a myth they have to come out of that. There is not much of a compliance burden to the company, and if you are going to be more transparent, attracting funds becomes very easy for the company.
Thank you, Anand. When I met Jinesh here in NSC right before the start of the conference, we were discussing about generally how the markets look at and what he does. And he said that we don't push entrepreneurs to get listed. We rather mentor them, groom them, and if they are really ready to get listed, then we help them through the process. So Anand, the same question carrying forward, sorry, Jinesh from Anand, what is your experience in helping the companies get listed, especially from the mindset point of view? And as Anand talked about valuation, as a advisor myself, we face a biggest challenge, and that is valuations. People who would be earning, say, 8 crores, 7 crores, are looking at 100 crores valuation. So how do you handle the whole valuation gamut and guide them or mentor them on what should be the right valuations, the right benchmarks?
Thank you, Sumit. This is absolutely right question. My life made easier by Anandji by answering a lot of things. But what we see at the start of the thing is whether there's a fancy of getting listed. So what it is that there is a lot of companies are getting listed from tier 2, tier 3, tier 4 cities. So it is important to understand whether you are actually an investable company or not. You are IPOable company or not. For that, the two things are very important. One is the industry in which you are working has a tailwind or no. So you have a longevity of a growth in the industry in which you are working. And I think second thing and the most important thing is the mindset of the promoter. Promoter should have a growth-oriented mindset. So once you get listed, what happens is the eyes which has been looked into at your company when you're previous to the listing and post your listing, people expect you to grow multifold. Since you talked about a small base company which has a top line of around 50-100 crores, or they are earning around 5 to 15 crores, they are expected to grow in multifold. So any company who has a top line of, let's say, in excess of 1,000 crores, they are expected to grow in the range of 10 to 15% CAGR. But where we are talking about the smaller size companies, it is important that they grow very fast. And for that, it is important to have a growth-oriented mindset. So that basically sets the tone for any company for to go for a listing. This is number one. Number two is the valuation. It's a very subjective matter. So what is important, you need to understand what is the intrinsic value of the business. So there are various ways to understand what is the intrinsic value of your business. In the stock exchange parlance, if you see the investor look at a PE ratio, price to earning ratio, somebody looks into the EBITDA multiple, where the asset size is heavy. In some sectors, people see the top line multiples. But at the end of the day, you need to see the intrinsic value. You as a promoter or somebody as an entrepreneur, deep down know what is the intrinsic value of the business. If you stick to your intrinsic value and let the market evaluate, market see you, and then take you to the growth path, would always be helpful. So valuation would always be subjective, and you need to be reasonable when you start with, and you can then build upon it.
Jinesh, as we take your question, reply forward, you would be meeting a lot of entrepreneurs, businessmen, aspiring to get listed. As you say, it's a fancy that people prefer to get listed. So what are the red flags you identify, observe, and work on resolving it during the whole process of due diligence of the company and preparing them for the listing?
So the first step would be to understand the industry in which the company operates. So that would be the first stage, that we need to thoroughly understand what industry they are working. From there, we get a lot of insights that what all are things that is important basically into those industry, what are the plus and minuses. Then we need to understand the working style of the promoter, the organization. So as Anand ji rightly suggested कि क्या होता है कि हमारा जो इंडिया में कल्चर है ना, सो पीपल टेंड टू वर्क इन अ टैक्स एफिशिएंट मैनर. तो टैक्स चोरी नहीं करते, बट टैक्स एफिशिएंसी हमेशा रहती है. दैट विल हिंडर द वैल्यूएशन. So there would be few things that in the due diligence process that you need to see is the legal part, the financial part, the accounting part, the secretarial part, and then the operating part. So you can deep dive into each of those things to understand that where we are lacking in terms of a company who is going for a listing. So you can't expect all the company, unless it is PE backed, to have the fully compliant mechanism. So you'll have to work very deeply with the promoter. You have to work very deeply with the team. Probably you will find those companies, 4 or 5 people are from the founding stage. So what they understand from the scratch, and those people would be basically helpful for you to take the matter forward. There would be a lot of red flags, obviously in a lot of areas, but you'll have to sit down, identify, speak to them, and get it resolved. And it takes time. So basically, previously we were seeing that SME companies got you'll be able to file the documents in 3 months' time and get it listed within 6 months' time, which we feel now, according to our experience, has been increased to 8 to 12 months.
You have rightly said, Jinesh, about companies managing finances, or rather from a tax point of view. We are into the financial advisory or the CFO advisory services as well. Being a chartered accountant who started in mid-90s, the first thing we used to ask our clients is, "Kitna tax bharna hai?" And then everything was reversed work. That if this is the tax, then this is the profit, and then accordingly reverse work everything. And from there I've come a long way, that why do you want to save tax? And we explain it to our clients that instead of saving 100 rupees on tax, increase the profits by 300 rupees and increase the valuation by 3,000 rupees. So effectively, you have made 2,700 rupee profit on valuation instead of saving on the taxes. So now when it comes to this, I'll go back to Anand, that what is that one advice you would like to give to a company who is preparing for the SME IPO?
I think first thing is very important that it's going to be a hard-earned money of the investors who are going to invest into the company. And predominantly people doesn't understand the business model, what is the profitability, they don't understand what is the finance, what sector they are into. So I feel the compliance should be very important to them. They should be very compliant before coming into the exchange for listing. Second thing is that they should be having a growth-oriented business model, very importantly. Otherwise it becomes very difficult for them to grow the business. Then the investing funds as an investor also becomes very difficult. So there should be a growth model and there should be a proper team on the top level so that at least there will be a segment of people who will be there, properly structured company before going for the IPO. Then it becomes easy for the promoter to run the business also. Otherwise, most of the company, if I take a company as a SME company or a startup company, if you take a company, it becomes the promoter becomes a like a director for a movie. He is the finance guy. He is the guy, spot boy and everything, if you talk about as a movie. So we need people to be there structured, qualified, skilled people should be there on the top. Then the growth model also comes into play. Then there should be a transparency and there should be a compliant company. So then it becomes easy for you to invest into the company. Otherwise, the kind of euphoria happening into the market. In last, I think September, we could really see 80 companies have filed documents, almost 60 companies have filed on the SME segment. So it's become difficult for the investor to invest into the company, also checking them back which company is good for them. And main important point that should be there if they are going for the listing should be fundamentally good. Any company which is going to come on board, which I have seen it as a regulator when I was working with BSE 5 months back, I would really see that what is the profit after tax. So predominantly the companies which are doing good and the profit after tax has been pretty decent, the EBITDA level will also be 30% more because after the taxation you are coming out with a PAT level. So I need the company bottom line should be very good, business model should be very good, promoter intention is very important, and third thing is that it should be compliant and have a proper structure in the company. It becomes a smooth sail for Jinesh, who's driving the merchant banking, because takes a decision to fund the company, promote and roadshow, and the investors are ready to invest also. I've seen, just to give an example, I've seen a company called Synergy Green. I listed them in 2018 from Kolhapur. They are into foundry business and they invested at a price valuation of somewhere around about 106 crores. They got 25% dilution, almost 26 crores. Today they are sitting at a valuation of 900 crores because the valuation has gone up. Why I'm telling this example is that the company technical director, whom I met first before meeting the promoter Sachin Reddy, and today he is having 10% of the company. He is commanding almost 90 crores of personal wealth also. Now he has inducted that his daughter is joining into company Synergy Green itself. So it is also creating a lot of job, and both the platform, what I could release for last 13 years, I've created more than 1 lakh jobs through this and funded 30,000 crores, which is today valued at 4.5 lakhs crores. That's a huge financial impact it has made. I don't know how many people have been tracking that. So I feel this is going to be the growth story next coming up soon.
$500 billion of wealth created in last 8 to 10 years is a tremendous thing. Rather, I've always, as an equity analyst, there was a very big investment house, amongst the only 2 people in India who owned shares of Berkshire Hathaway. And he told me one formula when you evaluate a management. And he quoted Einstein on the formula, E is equal to mc square. I said, what is quantum physics to do with investing? And he said that E is earnings of the company, M is equal to management. The first C is character of the management and the second C is capability of the management. So evaluate E is equal to mc square. The earnings of your company is not beyond the management.